What's up guys, welcome back to my channel. Today we're going to go over all things how to grow a small account and my 3 favorite ways to do so. So over the years I'll do a small account challenge every now and then, and I've been able to grow it from 1 to 5,000 and even 1 to 10,000. So it is very possible to grow a small account as long as you have the right account type, you have the right strategy and risk management. And that is what we're going to cover in today's video. I'm going to go over examples and how much money I needed in each example to make that amount of money will be covered, because I know that's also a really commonly asked question. I get a lot of questions. Can you really get around the PDT rule? Do you need $25,000 to day trade? There's a lot of confusion around there. I actually personally did not start my trading journey for about 2 years because I always thought you needed a crap ton of money. There is ways around that, and in today's video that is what we're going to cover. So I hope this adds value to your life. If it does, please hit the thumbs up button. But with that being said, let's dive right in. First off, I just have to say I apologize for the background noise if you guys can hear it. I swear the minute I decided to record this video and had some free time, it's like all the mowers in the campground surrounded my RV and they are just taking care of the lawn and the overgrown grass, and it's super loud and obnoxious. But with that being said, I really felt the urge and need to bring to you guys this live trade I took on Oxy, because it's going to be a great educational lesson when it comes to, if you have a small account, we're going to really slow this down and break this down on what I was doing, what I was looking for, how much money I needed to make the amount of money that I did, and also the fact that I had one winning trade and one losing trade, and why keeping that loser small the way I did is going to be very crucial for your long-term success. Now, the way that I'm going to do this moving forward when it comes to live trades, because I know a lot of the feedback I've gotten is you're moving too fast. I am a fast talker. I apologize for that. I know some of you are just way behind and you're not there even when it comes to things like vocabulary I'm using and just the speed of the video. So what I'm doing is, yes, this is a live trade, so I recorded this live and you'll be able to see that. But when it comes to the commentary I'm going to add on this video, I decided to do it in this format so I can pause the video, you guys can take notes, and we can review things at a slower pace. Now, that doesn't mean I'm going to talk slower. I'm sorry, it's just who I am. But at least when it comes to learning styles, I do want to try to accommodate more towards that beginner person who might not be able to keep up with an actual live trade, and we just need to slow it down for you, right? So with that being said, we're going to dive into trading calls on Oxy. So this trade was live from yesterday, May 10th. So if you want to go back and study what we're about to go over, you can do that. And today's the 11th when I'm recording this. So May 10th, and the trade happened around, it was lunchtime, so it was actually an unusual trade for me because I typically do not trade lunchtime. But I saw the setup and I decided to take it, and it did work out very well. Now, before I hit the play button, I'm going to go ahead and bring up my notepad, and I'm going to start to take notes with you guys. So if you want to get a sheet of paper and pause this video, I am trying to make these like little virtual classroom lessons so you guys can really get the most out of these. So pause it if you need to, grab something to write with, and let's take notes together so that way you can get the most out of this live trade. We're going to really be focusing on how to grow a small account. So that means I'm going to help break down the numbers for you. That is a big thing. A lot of people have misconceptions when it comes to what I'm trading, how much money it really takes. Even with the numbers on the screen, I know it can still be confusing. So let's first start off with, when you're trying to grow a small account, number one thing is, what are you trading and what do you consider a small account? So let's actually just start with that. So what do you consider a small account, right? So you need to write this down for yourself, because this can really vary amongst a lot of people and traders. So let's just say about 8 years ago when I first got started, you know, a small account for me, considering what I got paid and what I was making, was like $500. So, you know, that was a small account for me. Now that grew over the years as I started to make more money. So I got into flipping houses and real estate, and that 500, you know, small amount grew to, you know, 1,500 and then 5,000. And now I will say that I've kind of kept that mentality where I still consider a small account for me $5,000, but that's something I had to work up to. Now, I will say for most people that I've encountered, I've taught hundreds and hundreds of people, and a common theme is we've all settled on the average of $1,000. So when I say a small account, I'm assuming that you are trading with $1,000. Now that could be less, that could be more. It really is just dependent on your mindset around money. And we're going to use different examples in this live trade because personally for me, each trade I was taking, I was using about $3,500. Okay, so when you see my profit and loss on each trade, I was using about $3,500. Now a little later when we start to look at the premiums, we can get into the math of how I got this cost basis of $3,500, but just know that is all that it took for me to get into this trade and to either make the profit that I did or take the losses that I did, which I'm going to show you both. So losses are also a big part of being a successful trader. You're going to have to be able to handle losses, and so we will cover that as well. Now, let's actually just start playing this so you guys can see what was going on. Okay, so like I said, May 10th, I was looking for a reversal off of my key level of 56.69 on Oxy. Now, when I'm looking for a reversal to the upside, I'm bullish. I am therefore playing calls. I am not selling premiums or anything complicated. I'm literally just buying calls to then flip them later if the stock moves up. Now, to the left of the screen right here, I'll actually pause it just to slow down. To the left, you can see these numbers right here in this chart. This is my options chart. They hit a low of 47 and they were currently at 63. At this point, I had already took an entry and my average cost basis on these calls was $57 per contract. I was in 60 contracts, and so we can do the calculator. 57 times 60 equals $3,420. That was my cost basis on this trade, okay? My risk level was underneath 56.69 key level here, so it was very, very tight stop. So if I had an average cost basis of 57, these aren't going to be exact numbers because it's a little bit more complicated to tell you where I would stop out on the chart. I just use the actual stock chart, not the options chart, to stop out and put my risk level. If I had to guess, just based on previous price action when we reached down here, that would have most likely been about $50 per contract that I would have stopped out at, which is about $7 per contract I was holding. So let's do the math there. And I just had a rough number estimate of what I was willing to risk. So if I had 60 contracts and I was risking $7 per contract, I was risking $420, okay? So $420 off of a $3,420 position, but my target was way up here. So I'm a big component of understanding your risk versus reward and is it worth it based on the chart, right? And that was definitely worth it for me, but I knew that I at least had the potential to make $2,000 on target 1, which I'll show you in just a minute what that was, and not considering the fact that we might hit target 2 or target 3. So risking about $400 to make $2,000 is a really good risk versus reward return in my opinion, and that is why I was willing to take the trade and use the size that I was using. And I will show you in a little bit what the math would look like if you were trading with a smaller account, right? So $3,500 might be way too much money for you, and that's okay. We'll do a different example in just a minute, but I do want to show you how this was playing out. So you can see right here that I was just drawing the basic support that we had received on that 56.69 support level that I had predetermined before market open. So my alert was set near that. Once we hit it, I was then coming back to look for calls. This allows me not to be on the screens all day. So target 1 for me is just a strategy I've created over time with fibs, and that is the micro range between 57.53 to 57.37. That was target 1, and my OCD makes sure that we have to have this on the right. Now target 2 and target 3, we'll worry about that a little bit later. I try not to get too ahead of myself. If we start moving over target 1, then we can assess 2 and 3. I also made sure to put these notes in the Discord group just because I'm not a big fan of blank call outs. I like them to understand what I'm looking for so they can trade with me and not wait for me to tell them what to do. Definitely not that. So you can also see notes on my chart. I was looking for support at 56.69 to hold. That was reason for entry. And we were not hitting target one, but we were getting close, and you can see I was up between about 18 to 2,000. So 55 to 57% was what I was sitting at, and we had not even really hit target one yet. So we were starting to push up. I almost sold here, and just looking left, you can see we had basic resistance once, twice, and it looked like a third time as well. However, I was a little bit more patient with this because I was confident we were going to hit target one. And you can see on the left, my calls are moving up. So let's pause this for a second, and we'll bring this back just a little bit. Okay, so let's analyze what's going on here. Just to recap, what I was doing is I was buying 57 call contracts off of this support level on Oxy. I was looking to sell those 57 call contracts once we hit my target, which was micro range right here. And looking left, you could have just used basic resistance and sold for a very good profit, or basic support and bought for a really good entry. So it doesn't have to be overly complicated when you're like, well, how did you get those levels and stuff? That is way more advanced. And that is something that I do private lessons on, and I do include in my 8-week program and my membership. But just to keep it simple, you guys can literally just look left. Where did we catch support? Where did we catch resistance? And get a piece of that pie based off of previous data. And so right here you can see the call contracts I had bought for $57 per contract are now sitting between 88 to 90 per contract. So they increased in price. Therefore, I was making money. And you can see we were hitting a really nice double top against my target one. So I was more than happy with that. I didn't get a perfect exit. I captured about $1,800 off of that trade, which was really, really great. And honestly, I could have been done for the day. I should have been done for the day, especially considering it was a lunch trade. I usually don't trade after lunchtime. But I decided to be a little greedy and later in the day go back for another trade, and that ended up being my loss. So let's go look at what happened. So I am going to add on number 2 just to go over what we just talked about, the fact that you need to be able to draw basic support and resistance. That is just an absolute must. If you're a beginner or advanced, you should be able to do that, right? And then also trend lines. So a lot of what I'm doing is just using basic support and resistance and trend lines. And there are more advanced ways, like I said, but at the end of the day, as long as you can have this foundation, you should be just fine. And I also want to highlight a few more things. So I'm not going to write notes on this, but you guys can. I am not switching up my contract size, and I'm not switching up anything outside of like the contracts I'm trading. I'm trading the same contracts and I'm using the same size. I know a lot of times people make that mistake where maybe they're overly confident, so the next trade they increase their contract size, or maybe they don't use as much size on one and then they use more size on the other, and that's going to throw your numbers off. So if I am doing that, then I'm not going to have the likelihood of succeeding in the long term because my statistics are off. If you win 2 trades and then lose the third, and that third was double the size of the other 2, you are not going to be able to win, right? You're just going to have too many losses outpacing your winners. So I like to keep consistent size, the same 60 contracts for me, and I was trading the exact same 57 calls, and I did not change anything there when I was going back for round number 2. Now, round number 2, I actually didn't even stay on the screens. I ended up going to the gym, which is why I cut it for a loss, because I was not able to properly look at the screens, price action, when in reality, if I would have just held and looked left, I would have ended up profiting again into the end of the day. We'll look at that a little bit later, but it is what it is. It's part of the game. You're not going to make every single trade a home run, and that's okay. So you can see for trade number 2 here, exact same process. We were coming back down towards that 56.69 key level of mine, but we were also holding basic trend. So I saw this little channel developing and I was like, ooh, I really, really like the opportunity to see a potential third bounce back to micro range. So we also are right back to where my average was, which was near $57 per contract. So I'm going to go for round 2 and I'm going to do the same risk level underneath 56.69. Well, you can see kind of how that played out. We ended up coming up, and I should have took profits. So I was up about 10% at this point. But looking left, I even had it drawn. I was still just trying to make it a bigger picture day trade and follow my plan, which was target 1, micro range hitting again. And you can see we just caught clear as day resistance off of this red line, which I drew from this area right here. We caught sellers there and we started to struggle. So you can see it clearer here. This is where I sold before. We came back down and we were just catching resistance. We were not as strong. So fast forward a little bit because this is all pretty unnecessary. I don't want this video to be too long. You can see right in here, we rejected, came back to trend, which is not a good sign, and we started to break trend. So at that point, I was headed to the gym, and so I decided to set alerts, because if you're not on the screens, you either need to have hard stops or alerts set so you can react accordingly. And I would highly recommend those be hard stops, especially if you're new. For me, I just can react very quickly, especially on my phone, so I like to set alerts and then execute if need be. Okay, so at this point, you can see what it would look like on my phone. So that's a screenshot of my phone. I was setting alerts so that way I could be aware of if we were breaking trend or getting close to my target while I was at the gym. Now, I didn't record the rest of this because I did go to the gym right after this point. I didn't want to waste any more of my day just sitting in front of the screens. And so after this, we're going to have to go look at what happened. So I did add that little piece in here. So this is me going back to see what happened. Right in here is where I stopped out at the gym because I clearly saw that we were breaking below 56.69, so I cut it. And I ended up taking about a $240 loss, which was about 7%. Now, compared to my $1,800 gain earlier, $240 is not bad at all. That's a really good way to cut your losers really quick. But right where that red dot is where I ended up stopping out. And if you looked left, we were catching support where we previously had caught support. So in reality, I should have held on and just been okay and had my stop near low of day. But since it was the second trade and I was breaking my rule of not trading after lunchtime, I decided to cut it. And that is part of following your plan. I have no regrets over that, even though looking back at what happened, the premiums went all the way back up. So instead of losing $240 on that second trade, I would have made another like $800, and that would have been awesome. But that's not going to happen every single time. You're not going to get every single trade to work out the exact way that you want it, and that's part of it all, right? So let's go over some other numbers on if you had a smaller account. Let's say that you were using $1,000. How could you have played this, and what would it have looked like on the profit and loss side? But first, we got to go back to the notepad and talk about number 3, which was proper risk management. So I want to make sure you guys really, really caught that. So if I would have just not had a stop, not had a plan on that second trade, I could have possibly let all of my profits go from the first one. And if you have a small account, you have to be very, very careful with that, because any profits you get, you need to be able to accumulate those to build your account up, right? And so yes, even though the trade ended up working out in my favor and I got stopped out too soon, that's okay. It's part of it. So proper risk management means cutting your losers quickly. If it's not working out, cut it and try again later. There's always another opportunity. Now, let's say that you had, a $1,000 account, right? You don't want to put that entire $1,000 into a position. So let's say that you're just starting out with one contract at a time. Start with one contract. That is a really great way if you're a beginner to just get a feel for things. So if you started with one contract, that would equal, if I can type, $57 per contract, okay? And $57 per contract at a risk, let's just say that you were using the same risk level, so let's just say risking $7 per contract, which isn't horrible. That's pretty typical, at least for me. Now, some people have different opinions on that. They've got, really, really strict math on all of their risk percentages, or some people use a strict dollar amount. For me, we're just ballparking this here, right? We're not going to make it too serious. $7 is not even lunch at Panera. I feel like I spend more on that with their coffee. But anyways, so let's say that you buy one contract for $57, you're risking $7, and then your potential was you wanted it to hit that target. So what could your profit have been, right? So if those contracts went to, let's just say $87 for simple math. So $87 was where you sold that contract, so your profit equals $30. So risking $7 to make $30 is a really good risk versus reward ratio, and as long as you can keep that consistent, you should be able to build your small account. Now, I know it's not as easy as I'm making it seem here. Please do keep in mind I've been doing this for 8 years, but I do try my best to break it down into simple terms and just show you it doesn't have to be that complicated. Start with one contract, start slow, and like I said, Oxy is a great one because you can get at least cheaper contracts. These were at 57, and I was trading these on a Tuesday, and they were weeklies, so typically weeklies are more risky, but as long as you've got that stop in place, I mean, you're risking $7, right? As long as you've got that stop and you're disciplined and you're not just holding these overnight, you should be okay. Now, if you are trying to swing trade these, that's a different story, and you will lose all of your money. There's like a 97% chance theta will eat you away. And that's a wrap for today. I hope this video brought you value, but if you guys actually want more value, so I do have a free day trading seminar that will provide more information that if you do have a small account, I highly recommend you go watch this. It's going to cover things like the broker I use, and mainly the really key and important part will be the correct type of account you need to get around the PDT rule. So what I was just doing was day trading options, and there's a specific account you need to do that. So make sure you go watch this free day trading seminar. It's going to be linked in the description box down below. And then if you're interested in 8-week program, community, all of that stuff, that'll be the Peachy Investor program plus Discord right here. And then if you want another freebie, I do have a free beginner guide plus a lingo, which is really helpful, especially if you're confused on certain terms I'm using and you just need the very basics. But with that being said, I thank you guys so much for watching, and I hope this added value to your day. If it did, make sure to share it with other people who might be interested in getting into trading but feel like it's really overwhelming. That is my goal with this channel. And with that being said, guys, thank you so much. I hope you enjoy the rest of your weekend, and I will see you next week.